Last week, I was in Amsterdam for another great production of Money 2020 Europe. It's always a fantastic time, lots of new interesting people to meet, lots of exhibitors out there doing interesting stuff. But for me as a creator, the highlight is, of course, the opportunity to record episodes of this podcast live on the show floor. It's an opportunity I took advantage of last year with 2 episodes, and I've done the same again this year. If you've been listening in order, you would have heard my chat with James Hill already today. This is the second recording of that day when I sat down with Rob Straathof, CEO at Liberis, who are helping small businesses grow through frictionless embedded finance. Since I recorded those 2 episodes back to back on the same morning, I figured why not release them back to back on the same day too.
Good. Well, apologies to everyone out here that I'm an hour late. British Airways and the Dutch customs don't help either.
Well, I was going to ask about that because I saw you've got your private pilot's license. I wondered if you were relying on the old aging state airlines or you were going to fly yourself across the pond there.
Well, if I would have flown myself, I wouldn't have been an hour late, that's for sure. But I spent my last week actually renewing my flying licenses. So I spent about 12 hours over the weekend in a little plane. So.
Nice weather for it. Well, Rob Straathof, CEO of Liberis, a leading global platform for embedded business finance. Welcome to How to Lend Money to Strangers with myself, Brendan Lagrange, here at Money 2020 Europe.
Thanks for having me, Brendan.
Now, Rob, you're based in London these days by the looks of it, but this Amsterdam is a city you're very well connected to. So talk to me about your early career, your roots into this space, starting at ABN AMRO just down the road and now to sort of leading a major fintech in London. What path took you from there to where you are today?
Thanks. So from early ages, I've always been entrepreneurial. Set up my first company together with my brother in Rotterdam, actually, doing a business-to-business catering platform. So we do the catering for local offices of police and universities and local Shell and those kind of items. That was 2002. And then in 2006, I decided that the international world of finance was much more interesting. So I left for JP Morgan. My brother is still running that company. And funny enough, actually, in about 6 months' time, my parents or my family are celebrating 50-year anniversary of the company. So catering, delicatessen, cheese, those kind of things, very interesting. So JP Morgan did a lot of finance, a lot of deals. But then after JP Morgan, I joined a company that some people might know very well. It's called Wonga. And that was the first real digital lender in Europe. Fastest growing company in Europe in 2012. Learned everything what not to do with a lending company. And that was the basis for Liberis, basically. So instead of credit card companies and companies like Wonga, they put people in a debt spiral. They expand people and they never let them repay. With Liberis, we did the exact opposite. Our success is tied to their success, to an SME success. And that means that if they pay back, we get paid back. And that's a story of revenue-based finance.
Yeah, and that's one of the reasons I love talking about the SME finance in general, in that there are good use cases of consumer finance, of course, and you can see stories where lending is building returns in the way it should, like a mortgage, and other situations where it really is a net benefit to the parties involved. But consumer also has the sides like the Wonga experience in the UK where it's not necessarily a net benefit. But with SMEs, it is a real kind of, as you get taught in business school, we're going to borrow money today to buy an asset that's going to create value for the future. So I'm always excited to hear innovation there. And more so because it wasn't long ago that SME lending was the really boring part of the industry, where it was all 2-year-old financial statements and companies that had been in place for many, many years before the banks would look at them, to now revenue-based finance, where you can see what they sold yesterday and make decisions on that. So it's always exciting to hear that. One thing I want to start with, though, is when I was looking at the Liberis content online, you talk about reshaping small business finance to serve the underserved. And that's a sentiment I'm very familiar with on the consumer side. but not one I'd heard with regard to SMEs. Obviously, the situation, I think, has been described like that, but I don't think that terminology of underserved is thrown around as much. So talk to me a little bit about Liberis itself, kind of what you're doing there, but also this gap in SME funding that you're helping to fill.
Great. Needless to say, I find small business finance probably the most exciting topic in the world, rather than the boring topic that it aims or claims to be. And the reason being, if you look at Liberis, we support small businesses with working capital that directly impacts their livelihood, it directly impacts their revenues, it directly impacts how many people they actually hire. So the impact on the wider economy is enormous. And the way we do that with Liberis is, as an embedded finance platform, we integrate with big partners like Barclaycard or like WorldPay, like Klarna, like ISVs that have the software for businesses like Vagaro. And by integrating into those platforms, we see the actual data and we underwrite on the basis of yesterday's data or even last hour's data, depending on how up to date their data is. And by doing that, we have an 83% accept rate at the moment. And that's enormous. If you compare that to banks, all the banks always say that they have 60, 70% accept rates. Yes, that's after they actually filtered out the first 50% manually for, this is basically actively disencouraging you to apply for finance. So 85 or 83% accept rate versus a 30% accept rate from banks. Now, where does that bring Liberis as, what I would call like a real impact on society? 70% of all people work for small businesses. Small businesses add about 50% of global GDP or country GDP. But they only get about 20% of all the finance. So there's a massive gap out there. And whether it's 2 billion, 5 billion, 7 billion, or trillion, it doesn't really matter. It's huge. And what we are very, very fundamentally driven by is by helping those small businesses thrive. And we do that in three ways. So we provide them with finance that helps them with hiring new staff, buying inventory, buying marketing on platforms like Google or Facebook or Instagram or TikTok, and making sure that those small businesses grow their revenues. So the data that we have, all the cohorts that we've underwritten, there's more than 160,000 businesses. We see 1.3 million cohorts, 1.3 million business data points every single quarter, and we underwrite all those. And with that data that we have, we can target those businesses. And what we see from the businesses that take out the funding versus businesses that don't take out the funding, ones that get funded grow 20% faster than the rest of the cohort. So any industry, whether it's e-com, whether it's retail, whether it's bars, hotels, restaurants, they grow 20% faster. Now, that already proves that the funding is working. Now, if you then look at longevity of a business, about every single cohort that we've seen has a 22% lower default rate over 3 years, and actually 34% over 2 years. So we keep 34% of those businesses longer in business than people that don't get that funding. Now, and then the third point that I told you about is all those businesses, we always ask them how many jobs have we created or saved. On average, between 3 to 5 jobs per business that we fund. So we've saved hundreds of thousands of jobs in the real economy for people that work at those small businesses.
Yeah, and I think it's election year for most of the world at the moment. I think India's just finished today. South Africa, we had elections just finished a week ago. The UK coming up as well. But no matter what country you're in, there's a politician somewhere. In fact, probably all the politicians that are up for election are saying we love small businesses. Small businesses create the jobs, and then doing nothing.
Absolutely nothing.
But it's amazing to hear the proof of that story that's been told over and over. There's real numbers there, and it just requires a proper funding model. So talk to me about what that looks like in nuts and bolts. When you talk about the data you've suddenly got access to over the last few decades with commerce going digital and the sort of shift in what's possible, what are you able to see, and how are you able to make your lending decisions that are both able to accept such high rates, but also at the same time reducing risk and building these businesses? What do you have access to, and how are you turning that into these good decisions?
So I told you about the 1.3 million SME records that we get every single quarter that we use for underwriting. But what we also do is we pull all that data together. So we see years and years of revenue data on a daily basis from our partners. that we've now gathered over 8.5 years. So we got a massive data pool where we basically track a few things. So we've set up a Liberis SME intelligence, which is basically making use of AI to create a performance pulse for various sectors, geographies, check for seasonality, check for individual sectors. We can see whether ice cream shops, whether the weather is great or not, based upon the data from the ice cream shops. That's really cool to do. Needless to say, a lot of acquirers and a lot of ISVs have that same data. But what we do is we actually target the individual segments or sectors based upon that data. Say like, hey, if you would take out finance, you'd grow 20% faster. We see the growth rate, we see the underlying data, we see the underlying inventory, et cetera, et cetera. So with that, Liberis SME intelligence data, we simulate how businesses perform in the future. So enhanced personalized risk assessment, basically. And that is, every single business we underwrite gets a personalized offer. Now, Brendan, you might be getting, funding 20,000 euros over 7 months. I might have a very poor credit history, and I might get 3 months of funding in £10,000, for example. So it's very different by individual, by sector, by industry, and based upon the company's actual performance data. So what we do with that data, and we gather it all together. We have multiple AI, multiple machine learning regressions running in the back, but also multiple AI points where we actually check, predictive customer lifetime value. So can we give this customer a lower rate because we think that this customer is a digital native and comes back 8 times rather than 3 times? We make performance analysis and what I would call brand specific or people specific performance analysis that digital natives versus digital laggards versus people who check on their mobile phone are about 3 times more likely to renew than people who check via the desktop. All these kind of data points we use in assessing and pricing the customer. Predictive market trends for loan demands, so we know exactly which sector is requiring and requesting demand for loans right now. Automated loan portfolio tracking, so we have based upon the data that we have from 3 different geographies, US, UK, Europe. We know exactly in our portfolio where is the aggregation risk, where is the industry risk, etc. And then in terms of behavioral segmentation for collection strategies, we use AI there as well, where we actually really hone in and say, look, this person might be really a prompt payer. This might be an avoider, and different strategies for different people to collect on them as well.
Yeah, I think what's fascinating in an industry point of view is that we used to have consumer lending that had access to data and used to do lots of scorecards. And on the other hand, we had corporate lending that would do more manual, but these deep dives into multi-years of financials and looking at the industry segments, maybe getting some consultants in to talk about it because it was for hundreds of millions of dollars and it was worthwhile. And in the middle was SMEs that just got put in one team or another, depending on some choice and kind of ignored. But now, if we look at what you're able to do in the consumer side, you'll actually hear a lot of the data science people say that the traditional structured data, it's too thin to do the fun stuff with AI. The old tools work and there's nothing more you can really do. But you've got this wide set of data points that you can bring in that don't really exist for most of us as consumers. If you get paid a monthly salary, you get money in, you've got a few big payments that go out every month for your mortgage or your rental and your car payments. And it's quite simple. Whereas you've got all these bits of data you can bring in from a small business. You don't need to be employing thousands of ex-McKinsey consultants to do it. You can do this with the AI. And suddenly, this midpoint of the lending is probably where the most exciting innovations are being developed. And finally, in the space was actually driving the economy. So great to hear that from the outside point of view as well. You talk about fast, fair, and frictionless access to funding. If I was a small business and I'm looking to get the lending, what does that process look like for me? I'm obviously not bringing in sort of old signed off copies of my financial statements, but how quick can I actually become a customer and start growing?
Yeah, great question. So let me touch upon the customer journey, but also what I understand as fair, frictionless finance, needless to say, because that's what Liberis stands for. So if you look at your application journey, if you would come in through one of our partners, let's say it's a Vagaro, and you run a hairdress shop, and all the bookings go through the same system. We can see the cash takings, we can see the card takings. They can sell their products online. They integrate automatically into the eBays of this world. They know exactly, we know exactly how much that business is doing on a day-to-day basis. We analyze that data, and dear Brandon, you run such a successful shop. You are pre-approved for 25,000 euros of funding. From that point onwards, that you see that little ad in your dashboard that you interact with on a daily basis, it takes 4 clicks and less than 3 minutes to get the money into your account, because we already pre-approved you based upon all the data that we get from Vagaro. So the fastest we've done is 3 minutes and I think 22 seconds, somewhere around there. We can do it much faster, but mostly it's the customer that is actually hesitating, thinking like, should I click here or. So piece of feedback, we just went live with PayTrail in Finland, which is an ISV from our Nexi partner. And I just literally 10 minutes before I ran into here, I read a quick review that said, I had to call the customer because they weren't very sure whether they actually had applied or not. That's how quick it is. Now, for that reason, we also have a big page saying, you're now applying for funding, but also we have a 14-day money guarantee that if people have taken it out by accident and they wanted to just compare, they can give us the money back in 14 days. We'll refund you the entire amount. So that's how quick it can go. That's fast, frictionless, and fair. Now, talking about the fair and the impact that it has, what I see is there's still a lot of inadvertent discrimination in lending, especially in small businesses. Female entrepreneurs get a lot less funding than male entrepreneurs. I'm very happy to report that actually Liberis' accept rate for women is 20%, or decline rate for women is 20% lower than the decline rate for men. Now that's by itself already a great statement. But also 1/3 of our money is actually going into what I would call the lower income postcodes, which is great as well. And then in addition to that, if we track what we do for the country and how we measure it, what we see is the 20% increase on average in revenues. But we have cohorts of customers that have 100% of increase in revenues per year. Now that's the kind of cohorts that we're looking after. And from research, it's shown the American dream, which is, if I define the American dream, it is going from the bottom 20% cohort of income to the top 20%. That's the American dream. Like, you work hard, you realize your dreams, you think big, you dream. The direct relationship, this was presented by Michael Milken in Montgomery Conference in LA. The direct relationship between the American dream that is eroding across the US and the rest of Europe and the UK. In the US, 14% of that bottom 20% cohort is going from the bottom to the top. What we call upward mobility. In the UK and Europe, that is about half, not even 6%. Now, how do we encourage that? By giving access to capital, democratized access to capital, based upon your actual business performance. Yeah. Not about whether you live in a poor income, not about your race, not about whether you're what gender you are. We actually look at the actual data, and we realize people's dream by doing that. And that support brings trust, it brings motivation, it brings positivity in society about you being able to get the money to grow from bottom to top.
And I think it's also, you spoke about the banks sort of encouraging people not to borrow or not to apply in the first place for financing. There's that simple change of channel that removes the self-censorship. So if you're a small business and say you're a hairdresser, not traditionally linked to big finance or anything like that, and the process to get funding is you need to drive into the city center, go to a big bank, marble pillars, and put on a jacket and tie and speak to somebody very formally.
That's it. Yep.
You just, that's not for me. And you don't even bother. Whereas if you can speak to people on the phone where they are day to day, and you just reveal what's possible, you're taking away that. And I think that's a big part of bringing in these groups that are traditionally ignored, because the groups that are traditionally ignored know they're ignored and feel unwanted and don't apply, and it becomes self-fulfilling. So to suddenly just say, hey, we've looked at the business, this is what you could access, brings it all together. And yeah, fantastic to hear. And it is such an important thing to do. I hadn't realized the social mobility numbers were that low. But yeah, to give these businesses in these communities then a chance to grow and bring all those benefits up that come with it. I know that you're not always going to be able to share names, so maybe this is an unfair question, but are there any use cases you can talk about where you've seen companies do get these huge multiples of growth?
There's a bunch of case studies that we have. I think, look, there's a It is a washing machine and white goods kind of retailer who has bought 4 different shops across the country in the UK, and has basically gone from, I would say 10,000 of revenues per month to 150 to 200,000 of revenues per month, just by taking out funding and going through the few years of building his empire out. Now, that's a great story. There's also a story about it's a coffee shop who just they buy and build multiple coffee shops. And, the banks don't give them any money because there's no retail. They rent everything. They might get some equipment finance, but that's about it. We give them 20 or 40,000 euros or pounds to actually buy another coffee shop location and just decorate it and build out their empire. So they now have 8 coffee shops. Now, the best one I've ever had was during the pandemic. It was a pizza shop in New York, and we gave the owner, I think it was $30,000, $35,000. And we wrote to him like, so can you tell us what kind of the impact? He's like, well, first of all, you saved my job, you saved my livelihood, you saved my family, you saved like 11 jobs in my company. Now, those are the kind of stories that I always get warm and fussy from, because I think about my parents and think about my brother running their catering and delicatessen shop. I think like, look, that's a real impact on the economy that we have.
Yeah, and it's great to hear it from such different industries, because we hear about revenue-based finance and think about, Instagram, a new brand appears today and they want to sell new T-shirts or leggings or whatever it is. And it's the sort of very digital, very sort of brand-focused thing. But like white goods is an industry you figured has worked out how to do it. There's been white goods stores on the corners of towns around the world for many decades. And to hear you can have that impact in something like that is fantastic. And then that human angle as well, I think, is always worth remembering when it comes to small businesses, that there's more than just the business owner there. So a wonderful story, and one I think people will want to learn more. I know some people sitting here were coming definitely to hear directly from you, but if people want to go online, they want to learn more about yourself, your story, or the Liberis story, maybe contact somebody from the team, where can they go online to learn more?
Right. So look at our website. There's a lot of content out there. Hopefully this podcast will also be distributed, needless to say. With your permission, I'd love to put that on our website with a link out there so people can hear more out there.
Definitely. We'll put links to you and to the company on there as well. I know you've got a big impact report coming out. I think you've shared some of the numbers from that. Do you know when that's available for people to have a sort of an eye on look?
That should be available in the next month as well. So also on the website.
Perfect. Yeah. So Rob, thank you so much for rushing through from the front all the way through to the back at Money 2020. I think for people who haven't been, don't realize quite how big the setup is. Yeah, it's been an absolute pleasure hearing from you. And even more than that, a bonus hearing some of those stories of impact. Definitely one I'm going to be following in the future. So yeah, thanks for making the time.
Wonderful. Thanks for having me, Brandon.
And thank you all for listening. Please do look for and follow the show on your favorite podcast platform, and share the updates widely on LinkedIn, where lending nerds are found in our largest concentration. Plus, send me a connection request while you're there. Show music is by I Am Wake, and you can find show notes and written transcripts at www.howtolendmoneytostrangers.show or just www.htlmts.show, and I'll see you again next Thursday.